இன்ப வெற்பே பராபரமே. சிந்தித்த எல்லாம் என் சிந்தை அறிந்தே உதவ வந்த கருணை மழையே பராபரமே. ஆராகமுதே அரசே ஆனந்த வெள்ளப் பேராரே மோனப் பெருக்கே பராபரமே. ஆரறிவார் என்ன அனந்தமறை ஓலமீடும் பேரறிவே இன்பப் பெருக்கே பராபரமே. உரையிறந்த அன்பர் ஊழத் தோங்கோழியாய் ஓங்கி கரையிறந்த இன்ப கடலே பராபரமே. எத்திக்கும் தானாகி என் இதயத்தே ஊறி தித்திக்கும் ஆனந்த தேனே பராபரமே. திக்கொடு கீழ்மேலும் திருகருளாம் பொற்பறிந்தோர் கைக்குள் வளர் நெல்லி கனியே பராபரமே. முத்தே பவளமே மொய்த்த பசும் பொன் சூடரே சித்தே என் உள்ள தெளிவே பராபரமே. கண்ணே கருத்தே என் கற்பகமே கண்ணிறைந்த பின்னே ஆனந்த வியப்பே பராபரமே. வாக்காய் மனதாய் மனவாக்கிறந்தவர் பால் தாக்காதே தாக்கும் தனியே பராபரமே. பார்த்த இடமெல்லாம் பரவெளியாய் தோன்ற ஒரு வார்த்தை சொல்ல வந்த மனுவே பராபரமே. ஆனந்தம் மண்ணின் அந்தம் வைத்து வைத்து பார்க்க எனக்கு ஆனந்தம் தந்த அரசே பராபரமே. அன்பை பெருக்கி எனதாருயிரை காக்க வந்த இன்பப் பெருக்கே இறையே பராபரமே. வானம் எல்லாம் கொண்ட மௌனமணி பெட்டகத்துக்கான பணியான அணியே பராபரமே. ஓடும் இரு நிதியும் ஒன்றாக கண்டவர்கள் நாடும் பொருளான நட்பே பராபரமே. சித்த நினைவும் செய்யும் செயலும் நீ என வாழ் உத்தமர்க்கு ஆன உறவே பராபரமே. போதாந்த புண்ணியர்கள் போற்றி ஜெய போற்றி ஏனும் வேதாந்த வீட்டில் விளக்கே பராபரமே. முத்தாந்த வீதி முளறி தொழும் அன்பருக்கே சித்தாந்த வீதி வரும் தேவே பராபரமே. ஈனம் தரும் உடலம் என்னது யான் என்பதற ஆனந்தம் வேண்டி அலந்தேன் பராபரமே. நெஞ்சம் இளகி கரைந்து கரைந்தன்புருவாய் நிற்க அலந்தேன் பராபரமே. சுத்த அறிவாய் சுகம் பொருந்தி நல்லால் என் சித்தம் தெளியாதென் செய்வேன் பராபரமே. மாறா அனுபூதி வாய்க்கின் நல்லால் என் மயக்கம் தேராதென் செய்வேன் சிவமே பராபரமே. தாகமறிந்தின்ப நிஷ்டை தாராயேலா கெடுவேன் தேகம் விழுந்திடும் என் செய்வேன் பராபரமே. அப்பா என் எய்ப்பில் வைப்பே ஆற்றுகிலேன் போற்றி என்று செப்புவதல்லால் வேறென் செய்வேன் பராபரமே. ஊற்றறியும் என்னறிவும் உட்கருவி போல் செவி மாண்டற்றும் இன்பம் தந்திலையே ஐயா பராபரமே. சொல்லால் அடங்கா சுகக்கடலில் வாய்மடுக்கின் அல்லால் என் தாகம் அருமோ பராபரமே. பாராயோ என்னை மூகம் பார்த்தொரு கால் என் கவலை தீராயோ வாய் திறந்து செப்பாய் பராபரமே. ஓயாதோ என் கவலை உள்ளே ஆனந்த வெள்ளம் பாயாதோ ஐயா பகராய் பராபரமே. ஓகோ உனை பிரிந்தார் உள்ளம் கனலில் வைத்த பாகோ மெழுகோ பகராய் பராபரமே. அறிவத்தனையும் கொள்ளை கொடுத்துன்னருளை பார்த்தவன் நான் என்னை மூகம் பாராய் பராபரமே. கடலமுதே தேனே என் கண்ணே கவலை பட முடியாதென்னை மூகம் பார் நீ பராபரமே. உள்ளம் அறிவாய் உழப்பறிவாய் நான் ஏழை தள்ளிவிடின் மெத்த தவிப்பேன் பராபரமே. கன்றினுக்கு சேதா கனிந்திரங்கள் போல எனக்கென்றிறங்குவாய் கருணை எந்தாய் பராபரமே. எண்ணாத எண்ணம் ஏலாம் எண்ணி எண்ணி ஏடை நெஞ்சம் புண்ணாகச் செய்ததீனி போதும் பராபரமே. ஆழித்துரும்பெனவே அங்கும் இங்கும் உன்னடிமை பாழில் திரிவதென்ன பாவம் பராபரமே. கற்ற அறிவாலுனை நான் கண்டவன் போல் கூத்தாடில் குற்றம் என்று என் நெஞ்சே கொதிக்கும் பராபரமே. ஐயோ உனை காண்பான் ஆசை கொண்டதத்தனையும் பொய்யோ வெளியா புகழாய் பராபரமே. துன்பக் கண்ணீரில் துளைந்தேற்கும் ஆனந்த இன்பக் கண்ணீர் வருவதென்னாள் பராபரமே. வஞ்சனையும் பொய்யும் உள்ளே வைத்தழுக்காராய் உளரும் நெஞ்சனுக்கும் உண்டு நெறிதான் பராபரமே. பாசம் போய் நின்றவர் போல் பாராட்டியானாலும் மோசம் போனேன் நான் முறையோ பராபரமே. நன்றறியேன் தீதறியேன் நான் என்று நின்றவன்னார் என்றறியேன் நான் ஏழை என்னே பராபரமே. இன்று புதிது அன்றே எளியேன் படும் துயரம் ஒன்றும் அறியாயோ உரையாய் பராபரமே. எத்தனைதான் ஜென்மம் நான் பட்ட துயர் அத்தனையும் நீ அறிந்ததென்று பராபரமே. இந்த நாள் சற்றும் இறங்கிலையில் காலம் வரும் அந்த நாள் காக்க வல்லார்கான் பராபரமே. உற்றுற்று மருண்ட பாவியை நீ சற்றிறங்கி ஆழத்தகாதோ பராபரமே. என்னை விட இல்லாயனை தள்ளுதலால் என்ன பலன் உலகி பாராட்டி தேடியனை அடிமை சேர்த்தாய் பராபரமே. சுன்னத்தை சொல்வதல்லால் சொல்லற என் சொல் இறுதிக்கென்னத்தை சொல்வேன் எளியேன் பராபரமே. சொல்லும் பொருளும் மற்ற சும்மாயிருப்பதற்கு அல்லும் பகலும் எனக்காசை பராபரமே. நேச நிறுவிகப்ப நிஷ்டை எல்லாம் நடிமை காசை உண்டோ நீ அறியாததன்றே பராபரமே. என வேண்டாம் இத்துலகில் அல்லல் கண்டால் அச்சம் மிக உடையே ஐயா பராபரமே. கண்ணாவரேனும் உனை கை புரியாராயினந்த மன்னாவார் நட்பை நடிகை பராபரமே. கொல்லாவிரதம் குவலயமெல்லாம் எல்லாம் சொல்லுவதின் இச்சை பராபரமே. எத்தால் பிழைப்பேன் எந்த ஏனின்னருக்கெப்பித்தான் என்னெத்தவும் நற்பேதை பராபரமே. வாயினால் பேசாமத்தை வைத்திருந்து தாயிலார் போல் நான் கலந்தேன் பராபரமே. அன்னையிலே போல் கலக்கம் விட்டேன் கண்ணார என்னகத்தில் தாய் பராபரமே. நினைக்கும் துயரம் உள்ளே செந்தியாய் பற்றரும் பராபரமே. துயர் இவன் எங்குள்ள போதி பாசும் கேட்டு கைவிடவும் வேண்டாம் என் கண்ணே பராபரமே. எண்ணம் அறிந்தே இளைப்பறிந்தே ஏழை உயும் வண்ணம் திருக்கருணை வையாய் பராபரமே. நாட்டாதே என்னை ஒன்றில் நாட்டி ஹிதம் மகிதம் காட்டாதே எல்லாம் நீ கண்டாய் பராபரமே. உன்னை நினைந்துன் நிறைவின் உள்ளே உலாவும் என்னை அன்னை வயிற்றெண்ணம் அடைக்காதே பராபரமே. பரம் உனக்கு என்று எண்ணும் பழக்கமே மாறா வரம் எனக்கு தந்தருள் என் வாழ்வே பராபரமே. வந்தித்து நின்னை மறவாக்கடனாக சிந்திக்க நின்னதருள் செய்யாய் பராபரமே. எவ்வுயிரும் என்னுயிர் போல் எண்ணி இறங்கவும் நின் தெய்வ அருள் கருணை செய்யாய் பராபரமே. வெட்ட வேளி பேதையன் யான் வேறு கபடொன்றறி என் சிஷ்டருடன் சேரநந்தம் திண்டன் பராபரமே. இரவு பகலற்ற இடத்து ஏகாந்த யோகம் வரவும் திருக்கருணை வையாய் பராபரமே. மால் காட்டி சிந்தை மயங்காமல் நின்று சூக கால் காட்டி வாங்காதே கண்டாய் பராபரமே. பராபரமே சும்மாயிருப்பதுவே சுட்டு அற்ற பூரணமென்றே பார்ப்பதற்கு எளிதோ பராபரமே. சோகத்தின் பக்கம் முந்தி அடினா பண்ணாரமே தன்னோடு நான் நிற்பதென்றோ சாக்காய் பராபரமே மை வண்ணம் தீர்ந்த மௌனி சொன்னதென் வண்ணம் அவ்வண்ணம் நிஷ்டை அருளாய் பராபரமே அன்றியாதும் விளைவதுண்டோ நின்னருளாம் சித்து அன்றியாங்கள் உண்டோ சித்தாய் பராபரமே ஆங்காரம் அற்று உன்னறிவான அன்பருக்கே தூங்காத தூக்கம் அது தூக்கும் பராபரமே சிந்தை அவிழ்ந்து சின்மயமாம் நின்னடிக்கே வந்தவர்க்கே இன்ப நிலை வாய்க்கும் பராபரமே சொல்லாடா ஊமரை போல் சொல்கிறந்து நீயாகி அல்லால் எனமோ பராபரமே பேச்சாகாலம் சாச்சு மேற்பு கெட்டி என்றும் மங்களம் கெட்டயர்ந்தோர் பூரணம் நாட்டம் எனக்கு வரல் நன்றோ பராபரமே எத்தன்மை குற்றம் இயற்றிடினும் தாய் பொறுக்கும் அத்தன்மை நின்னருளும் அன்றோ பராபரமே எத்தனையோ தேர்ந்தாலும் என்னாலே இன்பம் உண்டோ சித்துருவே இன்ப சிவமே பராபரமே காட்டி மறைந்து மறையாருளை கண்ணோடு கண்ணாக என்று காண்பேன் பராபரமே பஞ்சரித்து நின்னை பல கால்கிறல்ல மஞ்சள் எனும் பொருட்டே அன்றோ பராபரமே எங்கெங்கே பார்த்தாலும் எவ்வுயிர்க்கும் அவ்வுயிரை அங்கங்கிருப்பது நீ அன்றோ பராபரமே அனைத்துமாய் நின்றாயே யான் வேறானில் நினைக்குமாறெங்கே நிகழ்த்தாய் பராபரமே நின்போதத்தாலே நினைப்பும் மறப்பும் என்றால் என் போதம் எங்கே இயம்பாய் பராபரமே ஒன்றை நினைந்தொன்றை மறந்தோடும் மனம் எல்லாம் நீ என்றறிந்தால் எங்கே இயங்கும் பராபரமே கொழுந்தில் வைரமேன கோது அற உள்ளன்பி அழுந்தும் அவர்க்கே சுகமுண்டாகும் பராபரமே பற்றும் பயிர்க்கு படற்கொழுந்து போல் பருவம் பெற்றவர்க்கே நின்னருள்தான் பேராம் பராபரமே யோகியர்க்கே ஞானம் ஒழுங்காம் பேரன்பான தாகியரும் யோகம் முன்னே சார்ந்தோர் பராபரமே அல்லும் பகலும் அறிவாகி நின்றவர்க்கே சொல்லும் பொருளும் சுமை காண் பராபரமே எச்சில் என்று பூவை இகழ்ந்தோர்க்கு உனை போற்ற பச்சிலையும் கிள்ள படுமோ பராபரமே அந்த கரணம் அடங்கத் துறப்பதுவே எந்த
பிரின்சிபல் இது வராங்களா சார்? ஆரம்பம் முருகன்.
சரிங்க சார்.
ஓகே, ஸ்டார்ட் பண்ணலாமா?
ஓகே சார்.
ஓகே சார், ஆனந்த் சார், அவர் ரிசோர்ஸ் பர்சன். சார் ஆனந்த் சார், சார் சந்திரப்பன் சார்.
சொல்லுங்க சார்.
Okay, okay. The postgraduate and research department of commerce and commerce computer application jointly organize 1 week faculty development program on GST Compliance, a practical approach. Today is the 4th day. So our resource person from Chennai Chandrapandan, CA Anand. This program is going to be handled by our Dr. P. Murugan, Assistant Professor of Commerce Computer Application, is going to be given a Master of Ceremony. On behalf of the Department of Postgraduate Research Department of Commerce and Commerce CA, welcome you, sir. Murugan, sir.
Okay, thank you, sir. It is my pleasure to extend a cheerful welcome to His Holiness Secretary Swamiji Maharaj and Kulabari Swamiji Maharaj. Most distinguished. Sir, audible, sir?
Yes, Murugan, your voice audible.
Most distinguished principal and vice principal of our college, Honorable Dean and Control of Examination, respected IKSC coordinator, and my beloved head in the Department of Commerce, Dr. Pasupati sir, and the head in the Department of Commerce and Computer Application, Dr. Chandrasekharan sir, my amicable staff members, Dr. Chellapandian sir, Dr. Vadivel sir, Dr. Vadivel Raja sir, Dr. Raja sir, Dr. Marimuthu sir, Sri Karthikeyan sir, Sri Mohan sir, Dr. Premanandam sir, Dr. Mohan Raj sir, most esteemed chief guest, CA P. Anandan sir, and various web location online forum participation. Good afternoon to one and all. Let us begin with program. Our youth chant mantra Om Sharanam by all.
I wish to welcome the esteemed principal of our college, Dr. T. Venkatesan, sir, young and dynamic personality. Next, I would like to welcome the chief guest of our today's faculty development program, CA Anand P, partner in GBN Sankar and Chartered Accountants, Chennai. He did master degree in Business Administration, International Taxation. He is article training under CA, G. Narayani Partner, S. Vengatram and Company, Chennai. He is Chairman, Information Technology Committee, Chengalpattu District, Branch of SIRC of ICAI. He is acted as AITT faculty in Chengalpattu District Branch of SIRC of ICAI. Is co-opted member of the Committee for Career Guidelines of the SIRC of ICAI. He practiced for more than a decade the handled audit for corporate, non-corporate in the field of taxation, central statutory audit of a bank, audit for educational institutes and trusts. He has presented papers in Tamparam CPE Study Circle, Hindustan Chamber of Commerce, T. Nagar, West Mambalam Study Circle, Kanchipuram District, Branch of SIRC, various private educational institutes, schools and colleges. He is going to deliver the today's lecture of GST books and records to spend his valuable time with us. Next, I like to welcome Dr. Pasupati sir, Head Department of Commerce, for coordinating this function. Next, I like to welcome Dr. Premanandam sir, Assistant Professor of Commerce, Computer Application, for deliver the vote of thanks. Once again, welcome to all. Welcome, sir. Thank you.
Thank you, sir, for your brief introduction and a welcome address. GST Gross Service Trading Act of Tax, Tax for Buy, Economy Developing, Harmony Integrating, Comforts Gaining, Luxurious Training. People are paying, India is rising. Here, the soul of the program begins with an apt speaker who has versatile and multi-skilled talents in the field of GST books and records, and the right person to open the doors for budding learners in this specific area. He comes from West Tambaram, Chennai. CA P. Anand, partners in GVN Sankar and Chartered Accountant, Chennai. Now the faculty development program is yours, sir. I have great privilege to invite you, sir. Please, sir.
My sincere thanks to the organizers of this faculty development program. My sincere namaskars to Swamiji Maharaj. Before starting into the session, I want to just say a few words on what is the importance of this particular topic. When we call GST, we can bifurcate GST into three different areas. One is registration and compliance with or entering into the GST stream. The second one is administration of the law or the compliance of the law. Third one is the litigation management. Whenever there is some litigation arises to the way in which we are following the law. The most primary focus on a day-to-day basis is the compliance of law. When it comes to compliance of law, what makes the persons or the administrators of the law to say that we have complied the law? There comes the importance of books and records. So to show to the administrators, to show to the people who look at us how we have complied the law, the books and records speaks. I think the presentation is can be seen by everyone. When it comes to GST law, these are the sections. Section 35 and section 36 deals with the books and records. Corresponding rules are 56, 57 and 58. Whoever wants to have a complete grip on this particular subject, they have to compulsorily read this each and every time they come across the subject. The GST is a dynamically growing law, so frequent amendments, notifications occur at a faster pace. And so we have to read it again and again. There may be changes, amendments, or when we read again and again, we get a different dimension in the subject with respect to our practice. The similar concept comes to students and teachers and those who practice in GST law. It is a dynamic subject. So whatever we are going to cover here will give you a glimpse of what the subject is and how to approach the subject as such. Moving on to books and records, section 35. First we will say what to maintain. What are all the books and records that are necessary to be maintained, which is covered under section 35, read with rule 56. Every registered taxable person, so whoever is registered under the GST law, shall keep and maintain accounts of production of manufacture of goods. So any manufacturer or producer of any goods has to keep a record of what are all the goods produced or manufactured. With respect to inward or outward supply of goods or services, so whatever goods comes inside this business and whatever which goes outside, you should keep a record of it. And you should also keep a record of stock of goods, that is the items which lies in his business. Tax credit availed. Input tax credit is nothing but the amount of GST on the items or services availed or purchased. Whatever the input supply, what we call in GST as input supply, on that component, on the input supply, we would have paid GST to our supplier. That GST we are eligible to take as an input tax credit while offsetting our GST outward tax liability. That input tax credit, whatever availed, we should keep accounts from that. Similarly, for outward tax payable and paid, and such other particulars as may be prescribed in this behalf. This is what the section says. Section will be normally in a broader perspective. The rules will give you more in-depth concepts, and with respect to this dynamic changing laws, we should read that most of the act will give you power to make rules to the government, and apart from making rules, there will be extraordinary other powers to give something by way of notifications. So in the present day context, what the law which are there 2 or 3 decades back before, you will have only act and law rules, only act and rules. It will not be much changes will happen only when in the Finance Act or in the budget. If anything is been amended, they will amend the act or the rules. But as the business dynamics change, there is need to be a constant upgraded change in the law with respect to change in the business. That is why you can see lot of notifications coming in GST law. It doesn't mean that they are changing the entire structure of the law itself, but at times when it required, they will change the way it is also happening. But mostly all these things are of recommendatory nature or a clarificatory nature or something which is regulatory. All these principles will be covered in notification. So one should remember, when we learn GST law, it's not a static law, it is a dynamic law. So what we read is getting changed on a hourly basis also. There may be changes on hourly basis also. We should keep up to the face of the changes. So this is the background with which we have to see the law itself. So section 35 generally says what are all the books and accounts which has to be maintained. And it is also said no, the books and accounts should be true and correct. So whatever you record should be true and correct. There should not be any false information recorded. And again, we are also asking you to maintain supplies, attracting payment of tax and reverse charge mechanism also to be maintained. What is reverse charge mechanism? That is a separate thing. We will take it up when the particular slide comes. We will talk about it. So they are also asking you to maintain the relevant documents which is specified in 56.1. Says invoices, bills of supply, delivery challan, credit note, debit note, receipt voucher, payment voucher, and refund voucher. Then our question arises: what to maintain? Broadly, we have seen under section that the sections and rules pertaining GST. What to maintain? Back to maintain. Principal place of business mentioned in the certificate of registration. When you apply for registration, you would have mentioned as the principal. This is the principal place of business, and additional place of business has different branches or different other places. So in every principal place of business, where in the certificate is mentioned, you have to maintain the books. If it is a single premises, you have mentioned only a single premises as the principal place of business, then it has to be placed in that books and records has to be maintained in that particular place. So if you have mentioned multiple premises in the certificate of registration, so in the respective places you have to maintain. So what are all the records and books pertaining to the other places, you have to maintain at those places. And if it is in head office, a summary of all those maintained at the branches, that summary has to be maintained at the HO level. How to maintain? The next question which arises is how to maintain. Can be maintained either in physical form or in electronic form. There is no specific direction as to this is the way you have to maintain, but they have mentioned these are all the information which has to be maintained. So whether you maintain in physical form or electronic form, you should see to that the informations which are required to be maintained are added to it. So next, how many years I should maintain? So the GST law says section 36, 72 months from due date of filing annual return. Normally, without the extensions and other things which is happening due to the lockdowns and other things, if the year ending is 31st March, due date for the annual return is 31st December of that particular year. So if it says 31st March 2021, 31st December is the normally the due date. So from the due date, 72 months is the time up to which you are required to maintain the books and records. So in case there is an appeal or revision of proceedings or any investigation going on for the particular assessment year, for the particular year, then the books and records has to be maintained 1 year after final disposal of order received on those proceedings, or the due date, that is 72 months elapses, whichever is later, that is the time frame to which the books and accounts be maintained. So let us see one by one what are the books to be maintained in 4 different buckets. We will see the books and accounts maintained by dealers. Dealers are nothing but the registered taxable person. Certain words, certain references has been carried forward from the VAT regime or the sales tax regime. All these things, since for understanding, because dealer is a common concept when it comes to sales tax regime. We know that they always a dealer. So that kind of things, normally this in GST we call as a taxable person. Yeah? Taxable, registered taxable person, which we call the person. So what are the books which has to be maintained by dealers? So general set of books. This is normally we know every commerce graduate, commerce people who deal with accountancy and other, you know, these are all the general sets of books which has to be maintained. Journals, ledgers, trial balance, trading and profit and loss account, and balance sheet. Apart from that, we will see what are all the other register which has to maintain. Stock register. So this is the prime register where we enter what are all the items which has come into our business and which is going out of business. What are all the items which we are keeping the stock of those registers, and we call as a stock register. And what are the particulars to be kept in the stock registers? What said in Rule 56(2). Particulars of opening balance. What are the opening stock of the previous financial year? Receipts, supply. And if any goods are stolen, destroyed, or written off by whatever means, that has to be specifically mentioned separately. And balance of stock has to be arrived at. So if insurance claim, if any is received, that has to be mentioned. This is all the prime requirement of a stock register. So what is the importance of the marking the goods lost, stolen, destroyed, written off, or disposed? But this is one record from where in GST, whenever the goods are destroyed, stolen, or it is not disposed of, it is not used in the supply, or it is not used in the manufacturing process, you are not eligible for the input tax credit. So this is the one line item which will be able for you to ascertain and for the assessing officer to ascertain whether any reversal of input tax credit is required for these kind of any eventualities, that is goods has been lost or stolen or the other categories. So this is one primary record. You should see to that you are entering it properly in the stock register. This is a sample stock register to have a glimpse of how a stock register looks. Depending upon the business requirements, the columns and the other things can be altered. You should see that the primary requirement, that is the receipts, the opening balance, supplies, closing balance, and other things are recorded in the stock register. And this is one electronic. This is shown a manual stock register format. This one is an electronic. You can maintain it in an Excel spreadsheet also. So next comes the advance register. Whenever you take advance, you should see to that your GST liability on that is discharged. So not only GST liability occurs when you supply the goods, whenever you receive advance also, the GST liability arises. So there should be an advance register which says what is the advance received, paid, and adjustment made thereto. So this is has to be kept as a separate register, which is Rule 56(3) says about it. Tax records. So details of tax payable, tax paid on reverse charge, tax collected and paid, input tax credit claim, register of tax invoice, credit notes, debit notes, delivery challan issue or received during any tax period has to be maintained. By and large, if you see, they will be saying so many items. Let us not get confused on all those things. The main crux of all this mentioning is you should record all transaction and record all particulars with respect to those transactions. That is the prime motive behind asking all these things. So whenever you are arriving at the tax liability arrived by you should be able to be verified by a third party. That should be the way the things has to be recorded. For that, they have specified what are all the minimum required details which has to be maintained in the records. So this is what the GST input tax report. So whatever the input, so you can have a combined register also. There is nothing bars you from maintaining multiple books instead of a single book. Also, you can maintain. You have to see to that all the information which is required to be maintained in multiple books are captured in the single book. That is also is sufficient enough in compliance with the particular requirement of the law. So this is GST sales register or the outward supply register. So what are the serial number wise, invoice wise, date, buyer's name, buyer's GST number, taxable amount, what are the taxes collected on that, total invoice value, all these things to be captured in the GST sales register or GST outward supply register. And every month you should arrive at the output liability which is going to pay. Whatever the output tax collected from sales or supply minus the input tax credit available, you are going to pay the output tax. That calculation for a month-on-month basis you have to maintain in the required format. Then comes the address register. This is nothing that the vendor and the supplier's address, complete name and address. If you are transacting with any warehouse or godowns, those addresses. This is for easy reference by any assessing officer, any person to find out what is the other persons, to the persons to whom you deal with, those addresses and their details. If they wanted to collect this address register, normally in any business, no, you could have seen in the address register you maintain with all the name, addresses, the telephone number, contact person, contact details, everything that you will maintain. That is what it has been termed as an address register. This is a simple Excel format to keep in the address register in spreadsheet or in Excel worksheet. Agency register. This is particularly for those who deal with the agency business, and say ABC company is taking an agency of Hindustan Unilever Limited or say India Cements. Like that, they have taken the agency shipments. They have to maintain these particulars. They should keep an authorization receipt from each principal. So if they are dealing with multiple principal, they have to keep the authorization receipt. For any agency, they will have an agency agreement. That is what the authorization letter which has been said. This is I have appointed. You have been appointed as so and so agent of us. So these are the terms and conditions. That this authorization letter should be there. And you should also keep what are all the goods you have received and what are all the goods you have sold on behalf of the principal. Similarly, with respect to accounts furnished to the principal, every account furnished to the principal has to be maintained separately. And whatever tax payable on receipt or supply of goods on behalf of the agent, on behalf of the principal by the agent, has to be maintained. This is what called the agency register. Production register. This is a normal manufacturing company used to keep the production register. What are all the quantity of raw material used in the manufacturing of the work in progress at different stages, and finally the final goods which has been sold. So the production register has to be maintained for each and every product that has been produced and at whatever stages it is going through. So a complete record of raw material conversion to finished goods, you should keep a production register. So this register normally will have those who have dealt with manufacturing company will see there will be lot of wastages in between. Say you input 100% raw material, means it will not come as 100% as an output. There may be losses, production losses or manufacturing losses. The losses may be termed as a fixed loss, or there may be a loss which is not, it's an abnormal loss. You can call it as a normal loss and an abnormal loss. Whenever there is an abnormal loss, which is material amount, you have to see to the bottom of the GST implication. Say some goods in the pipeline, say some raw materials. You say 100 raw material, out of 100 raw material, 50 raw materials getting damaged during the transit or during the operational procedures within the, say, which is an abnormal, say, mishandling of that raw material. You lost 50 means there should be an input reversal on this 50 goods. So there are various implications on these kind of abnormal losses. So your record should maintain in such a manner. These things are you are able to calculate at the month end, so that you are discharging the GST liability appropriately. Register of services. When we talk about GST, it is a combined law which covers goods and services. Both goods and services it covers, which calls as supply. It doesn't differentiates between goods and services, but there are different categories of taxation, different procedures, but law is same for goods and services. So when it comes to services, you have to maintain, in case of services, you have utilized any goods in the provision of services, you have to maintain a quantitative details of goods used in the provision of services. And the details of input services utilized and services supplied. So whatever input services utilized, say if you are a manufacturing company, you have utilized a job worker service, so that is an input service. If you are trading in goods, you may have utilized for some service from packing, or some labor services for say works contract labor service, or some other say for a security, you would have availed a security service, or some other maintenance service also you would have availed. That is input service for traders and other people. That input service utilized and services supplied. You may have instead of supply of goods, you would have also supplied services also. For that outward supply of services, you have to maintain this register of services. So both for the input and output, you have to maintain register of services, and for any materials used in the provision of services, you have to maintain the quantitative details of the goods used in the provision of services. This is what Code 5613 says. Next comes the works contract register. So whatever works contract, let us simply say if it is a job work, means it is in the production line or manufacturing, whatever the get and help of the others during our manufacturing process, it is a job work. Works contract is nothing but whatever any fixed assets, you avail any services from others for building of an asset, say building a factory building, or say factory premises, or erecting a machinery. All these comes under the works contract service. So whenever works contract is involved, you have to maintain the name and address of person on whose behalf the works contract is executed, description, value and quantity of goods. This works contract register will so both for the works contract you are availing and works contract you acting as a works contractor. Both the things you do, the register will has to be maintained in such a manner. So description of value of quantity of goods services placed in the execution of it. Similar to job work. So what are all the goods which are used in the works contract, that has to be quantitative details and other value-based details has to be maintained in the particular register. So any payment received in respect of each. So there will be a part payment receipts on behalf of the works contract, that has to be maintained. And name and address of suppliers from whom the goods or services has been received has to be maintained. All these particulars has to be captured in the works contract register. Other important rules. So section and the rule, whatever it says, we are covering here. What other important things it says? Entry should not be erased, effaced or overturned. This is a general principle of accountancy. You should not erase or efface or overwrite anything. if anything has happened, you have to get for attestations. Whatever the corrections you do in electronic form also holds good for this also. So you are not supposed to alter any records in electronic form also in subsequent days. Say for after 10 days, some entry you have made in Excel, it seems there is an error. You should not go and rectify that. Actually, for that rectification, you should pass an entry as a current date. That is what the general accounting principle that you should keep in mind, whether it is in the physical form or electronic form. Both the things has to be kept in mind. Volume of books to be serially numbered. Whatever books, whatever records, whatever you are keeping it as number, it has to be serially numbered and indexed so that it will be easier for us to identify and pick those records from the indexes of the volume of books which we maintain. And with respect to electronic records, when it is being maintained electronically, you should see that proper backup procedures are followed and the information can be restored within a reasonable period of time. So produce on demand electronic records or documents duly authenticated by him in hard copy or in electronically readable form. So the department may ask either to get a printout of the records maintained electronically, or they can ask us electronic format itself in the way they is in a readable way. And if it is password protected, they can ask for passcodes or any codes which are used, any course explanation for this course. All these things they can ask for you when the records are maintained in. You should see that these things are adhered to. This certain rule is on. And custodian of goods with unique enrollment. This is two persons, warehouse person and transporter. These are two different persons in the GST law. Warehouse person is a person who keeps the goods in his warehouse on behalf of somebody. Somebody will keep the goods in the warehouse for a particular point of time. He is the warehouse keeper. Similarly, transporter will transport the goods from one place to another on behalf of some other person. These two persons are supplied with a unique enrollment number. Unique enrollment number is given by GST. These two persons has to maintain goods and records pertaining to the goods maintained or goods stored in his warehouse or goods transported by the transporter. So this is what the two persons, these two specific persons has to maintain the two specific details which is required under the law. This is for the transporter, that is for warehouse people, and this is for transport. These are all the books which are required to be maintained by dealers. So whenever a GST or any law is there, when we read any law, particularly with respect to taxation laws, the procedural aspects will be covered. Will be mostly covered in the rules. So whenever we educate somebody or whenever we administer the law, we should see to that the act is being concurrently read with the rules. So there may be a short description of what to be, how to be done in a particular manner will be given in the act. A detailed procedures will be drafted in the rules or in the notifications adherent to the act. This has to be taught to the persons who come to know the law. This is what the one of the requirement when it comes to reading taxation laws as such. So maintained by GST. So you maintain certain books as a dealer. What is the books maintained by the GSTN? GSTN are the administrator of the GST law, the GSTN website. What they maintain. Let us see what are the books they maintain. Electronic tax liability ledger, electronic cash ledger, electronic credit ledger. These three ledgers are the ledgers which is being maintained by the GSTN website or the GSTN site as such. So in the electronic liability ledger, whatever the debits, whatever the arises due to liability on results of outward supply results of any demands on assessment, penalties, interest, whatever the liability arises to the dealer which has been debited, and whatever the input tax or the TDS credit or the TCS credit or the tax payment which has been used for the offset of the debit liability is been credited in the liability ledger. So the electronic cash ledger is nothing but whatever payments you make to the GSTN website, it is being populated in the electronic cash ledger. What is electronic credit ledger? So credit ledger is nothing but whatever the input tax credit which you avail on the input supplies is populated in the credit ledger. Subsequently, when you offset with the liability ledger, then this credit and debit gets offsetted in the electronic credit ledger. Similarly, in cash ledger, whenever you pay, it is being debited and get as credit available for you to utilize for your liability. Whenever you offset that liability, that cash portion goes up to the liability ledger. So this is the primary three ledgers which is being maintained electronically by the GSTN website. So this is the GST site where you access this ledger. Normally when you log in, you get a dashboard. In the dashboard, you see there is a services menu, a drop-down menu where you can access. There is a ledgers column. In this ledger, you can see all these three ledgers: cash ledger, credit ledger, and cash ledger, credit ledger, and the liability register. So this is where you get the liability register, and this is what it looks like, liability register. So what is the balance available? So whenever you say file a liability, there is an outward liability statement, it gets debited, and whenever you get offset using the cash payment, it gets credited, and the balance is getting adjusted in the liability ledger. Similarly, this is the cash ledger. You can get cash ledger for a particular period. So this is how a cash ledger looks. Whatever the cash payments you make through the GST challans, it appears here, and whatever adjustments you make in the offsetting the liability through the liability ledger, that appears in the cash ledger. This credit ledger is whatever the credits which is available you through the input supply appears here. All these data are captured by the returns we file. So GST returns. So GSTR1 is the outward supply register which we file before 10th of every month, and the due date for different classes of persons are fixed at a different dates. You have to check for those due dates. GSTR1 is the outward supply register or the sales register which you upload, and subsequently GSTR3B. 3B is a monthly summary register where you file the GST liability on the outward supply, what are the input credits you have availed, what is the output liability which are required to pay. That is being you file with the GSTR3B along with the payment. It is the net liabilities you have to pay, means you pay through the GST cash ledger. So you should see to that sufficient balance is maintained in the cash ledger. So whenever you file this GSTR3B, it goes to the liability register. Whatever the input tax credit you go avail, it goes to the input tax register. Then net liability, whenever you say this net liability you have to offset, then the liability ledger and the credit ledger gets offsetted. Balance required if it gets offsetted in the cash ledger. If cash ledger doesn't have any balance, it will ask for you to pay through the challan. This is what the GST payment challan which is generated for payment of GST. So when it comes to various forms, these are all the various form numbers. I'm just highlighting this to for you to understand all these, whatever records, ledgers, whatever you say are goods, you say any challan, everything will be numbered so that for you to identify and recollect it. So if it says a form GST PMT 01, it is nothing but the liability register. So if it is GST PMT 02, it is the credit ledger. So PMT 03 is order for recredit of amount to cash or credit ledger. This is a separate order form which has been specified as PMT 03. So all this PMT is nothing but payment related forms. So GST R means R of return related forms. So the prefix GST is been kept for understanding. This is for with respect to GST in all the forms. So PMT means payment related and R means return related. So like this, every form is been numbered or uh, a name has been affixed to each and every forms. So 04, 05, 06, 05 is nothing but the cash ledger. So 06 PMT 06 is the challan which I showed for deposit of tax. So with respect to any intimation of discrepancies in the payment, you have to raise a PMT 07, and PMT 08 is transfer from one account. Say you are having account balance in CGST credit ledger, and you wanted to don't say credit ledger, cash ledger. If it is in cash ledger, you can move from one cash ledger to other cash ledger. But credit ledger, it can be offset with the outward liability in a certain manner. The act and rule says you have to adjust the GST credit, whatever the input credit avoid with respect to CGST credit, SGST credit, and IGST credit in a specific manner. That can only be adjusted. But with respect to cash payments, if you have only paid CGST, SGST instead of IGST, then you can transfer from CGST, SGST, IGST, and vice versa. For the transfer, you have to apply through this form in the GST portal, that is PMT 09. Now let us move to the records maintained by dealers. What are all the documents and records which are necessarily to be maintained by the dealers? Tax invoice, which has been read under Rule 46, bill of supply, Rule 49, receipt voucher, Rule 50, refund voucher, Rule 51, payment voucher, Rule 52, revised tax invoice, credit notes and debit note, Rule 53, IST, input service distributor, invoice, Rule 54, eBay bill, Rule 138. Let us see one by one what are all the documents or records which we are going to generate in GST. So tax invoice. This is with respect to transaction. What is the document which is pertaining to the transaction? Any taxable supply other than composition dealer and input service distributor, then tax invoice has to be generated. If it is an input service distributor, then ISD invoice. Exempted supply or supply by composition dealer, then it comes to the bill of supply. And supply of both taxable and exempted, then it comes to invoice from bill of supply. Amendment in any transaction with respect to tax invoice, it is debit note or credit notes. And advance register, that is what we see earlier said, no, advance register. So any advances, you have to give a receipt voucher, and what are the receipt vouchers you have generated, that has to be captured in the advance register. So similarly for refund of advance, you have to issue a refund voucher, that again has to be captured in the advance register. Payment by registered person to supplier under reverse charge, you have to payment voucher. So when it comes to reverse charge, let us discuss what is a reverse charge here. Normally, whatever the item you sell, that is you sell as a pencil to a third person. Say the cost of pencil is 1 rupee. On that 1 rupee GST is 5 paise, say 5% it falls under. So you will call it 1 rupee 5 paise from the person to whom you sold the pencil. That 5 paise is the liability you have to pay to the government, because the tax you have collected from third party, you have to pay to the government. Since this is a value added tax, so you are supposed to pay only for the value addition. So pencil you are manufacturing from, say, timber and lead, which has been purchased from a third party. On the timber and lead you have paid GST. Say that GST amount is 3 paise. So this 5 paise has to be paid to the government. 3 paise you have already paid to the government on the purchases you have made. So the balance 2 paise you will pay as cash to the government when you discharge the liability on a month-on-month basis. So this is what the normal forward chart. So you collect the tax to whatever credit it is available for you on the inputs you use to offset it and you pay. But when the input is from a say unregistered dealer, as such there is no the unregistered dealer reverse charge is being kept in abeyance. And don't go, let us not go inside the what are all the rules which is kept in abeyance, what are all the things which is kept in abeyance. As such, when you purchase a good from an unregistered dealer, you are supposed to pay as if you have the tax on that particular amount. Say I have purchased a lead from the unregistered dealer. On that lead, I have paid 2 paise tax. If I have purchased from a registered dealer, I would have paid 2 paise as a GST. Since I have purchased from non-registered dealer, on that lead amount, whatever the cost of the lead, I will apply that lead GST amount, GST percentage on tax on that, tax percentage on that. That amount I will pay as a tax to the government, and after paying, I will take as a credit. So this is what the reverse charge mechanism. Instead of the I am paying to the dealer. Normally, when I purchase, I will pay to the dealer or the supplier. That supplier will pay to the government. In the reverse charge, I am not paying anything as GST to the supplier. So whatever the GST component on that, I will pay from my pocket the GST amount. Again, since I am eligible to take credit, I will pay and take credit on the same month, so that amount I can offset against the output liability. So this is what the reverse charge mechanism. Whenever you purchase an item or do a transaction which are subject to reverse charge, apart from this unregistered dealer purchase, there are other transactions. Say when you avail a service from lawyer, it is also coming under reverse charge. Similarly, from good transport agent, there is a reverse charge mechanism. So whenever a transaction which requires GST to be paid on reverse charge mechanism, you have to raise a payment voucher. So this is what a payment voucher is called. Payment voucher will look similar, but it is an invoice raised by you on yourself. You will raise the invoice to yourself. So that is the document. You will raise an invoice on yourself as a payment voucher. That document, based on that document, you will take a credit on the same document. That is what called the payment voucher. Next come the transaction which doesn't have involved taxes. Say stock transfers, movement of goods with respect to job workers, all these kind of transaction which doesn't not have a GST liability or doesn't have a GST component which is required at that juncture, a delivery challan is issued. We will see each and every document one by one detail. So when it comes to tax invoice, these are all the questions we should raise before raising a tax invoice. The first question is the transaction a supply? The primemost thing is know whether it is a supply. If it is a supply only, the tax invoice raising will arise. So first is we have to see whether the transaction is a supply. Next, if it is a supply, we have to see whether it is a taxable or exempted supply. Next, is it a supply? It is a single or multiple. So whether it involves one item or multiple items. Whether it is a mixer or composite. What is a mixer supply and what is a composite supply? So this is separately defined. You have to read it. But for understanding, I will briefly say what is a mixed supply and a composite supply. Mixed supply is nothing but the different items you buy from the grocery shop. So different items you buy from the grocery shop have different tax rates, and each you pay tax on the GST on those based on the various tax rates for those items. That is a mixed supply. What is a composite supply? Composite supply at times you may say, for example, you buy a laptop. The laptop bag is supplied along with it. It is free of cost. Or you take some other item and another item is bundled with it. That is a composite supply. Item is one thing which is buying. The ancillary items are Say for example, you can say machinery also. When you buy a machinery, there is some plastic components or some tools also supplied with that. Means those things are doesn't comes from top of the main item, which is a composite item. Main item is bundled with some other thing. It is a composite supply. The rule for composite supply, the rate of tax is with which will be primary product. So if primary product is laptop, the rate for the bag will also the laptop rate will apply. That is what the differentiation between mixed and composite supply. In mixed supply, different rates for different components. In composite supply, the rate is the item which is predominantly on that particular supply. So next, when it comes to pricing taxing was whether it's a goods or services. We have to see whether the supply is a goods or supply of services. All these things has to be kept in mind so that the appropriate tax invoice is raised. So next thing, time when an invoice has to be issued. This depends on the time of supply. So whatever the definitions, when I say books and records, I am talking about invoices. And invoices, I say all these things. Say when it is tax invoice, you have to see whether it is a supply, whether it's a tax or exempted. All these things are saying. I am saying this. I have to keep in mind. It doesn't mean it is the law doesn't say about this. For each and everything, what is a supply? The law defines what is a supply. Is it a taxable or exempted? Law defines what is a taxable supply, exempted supply. Single or multiple, mixed or composite. All these things law defines, and rule is there, notification exists. You have to refer all those things before raising a tax invoice. And similarly, with respect to time, it depends on time of supply. Time of supply is defined in the law. I'm just giving a glimpse of what the law says on when it respect to goods. So when it respect to goods, the earliest of these three dates or three occurrences, the invoice has to be raised. Say date of issue of invoice is the current date. So now if you raise the invoice today, that is the date of invoice to be issued. Date of receipt of payment. Say you have received payment one day before itself, means that is the date in which you have to raise the invoice. Last date in which invoice has to be raised. Say by contract or by virtue of the transaction, the last date or the date on which the invoice has to be raised. Say yesterday you have received the payment. Today you are making ready the dispatch of goods. Tomorrow you are dispatching the goods. So that tomorrow is the last date on which invoice has to be raised. So this is the earliest of these three dates is the date on which the invoice has to be raised for goods. So when it comes to services, the date of invoices should be or the date of service. So issued within 30 or 45 days, depending on different categories of service. You have to raise the invoice within that period. Or if you have received the payment date or the receipt of payment on date, the date on which you have received the payment for services, the invoice to be issued. Tax invoice, this is what the general rule. So before or at the time of removal of goods, where supply involves movement of goods. So when it is the supply of goods is involving any movement of goods, then before or at the time of removal of goods, the invoice has to be raised. Or before or at the time of delivery of goods or making available the goods. Say I am selling to a person, that person is supposed to collect goods from my factory premises or my business premises. If I keep the goods ready and at a place or him to collect, means if I kept that ready itself, then at the time itself I should raise an invoice. So that here the person will come and collect on next day, or he may collect after 2 or 3 days. That doesn't mean. So if you have earmarked the goods and kept it separately, means you have to raise an invoice and keep. That is what the rule says. So removal here means they all defines whatever the any words or any actions. All these things are defined in the act or the rule. The CGST Act removal of goods specifically says dispatched by a supplier or any other person acting in his behalf, collected by recipient or any person acting in behalf. So whether you have dispatched or somebody has collected, then it becomes removal of goods. So at the time of removal of goods, it before or at the time of removal of goods, you should have raised the invoice. So when it comes to continuous supply of goods, so what happens? Supply involves the type of goods which you are selling involves continuous supply, or your contract says, say, I need 500 goods to be dispatched, 10 goods every day means. So my contract says a continuous supply of goods. So when there is such kind of agreement, when on each and every say issue statement is issued, then there should be a invoice to be raised. Or when each and every payment is received, you should raise an invoice. This is what the earliest of these things you should raise the invoice. That is what the rule says. So continuous or on a recurrent basis means what this means. It is on a continuous or recurring basis under a contract. So or it may be by means of a wire, cable, pipeline, conduct, and the supplier sends invoice to the recipient on a regular or periodic basis as notified. So there may be in the contract to say you raise a regular invoice on a periodic basis. If all these conditions are there, it is means a continuous supply of goods. Whenever there is a continuous supply of goods, then you should adhere to this rule when each payment is issued or each statement is issued or each payment received. The earliest of these things you should raise a invoice. Then goods sent on approval or sale, approval for sale or return. So you say you send 100 goods on one person. So you say you are sending it for on approval. So he may accept 50 and return 50, or he may reject the entire 100, or he may accept the entire 100. If such kind of things has been sent, then what is the time at which it has to be invoice has to be written? Time when it becomes known that supply has taken place. The moment the other person accepts the goods, say he accepts 50 means you have raised invoice at 50. Say if he says he accepts 100 means you have raised. Immediately when you know that he accepts 100 means, then you should. And there is also circumstances that you say that that person doesn't gives you any acceptance, but he doesn't. He utilizes for his manufacturing process or other process that you know that he has used the goods means. Then you know that supply has taken place. Then you should have also raised. Just because the confirmation is not received from that particular person, you cannot postpone this. And after all these things, there is a catch-all 6 months from date of removal. Either he has not confirmed the whether he has accepted or not, he has not utilized the manufacturer, or you do not know whatever it has happened or not. You have sent the goods, but you do not know what is the status of goods. So after expiry of 6 months, you should raise that invoice. Even if you separate some goods, that person is not traceable. If you know that this is not traceable, immediately you have to raise the invoice. If you do not know, but you wait for 6 months, means after the expiry of 6 months, that is from the date of removal from your factory, 6 months elapsed means you have to raise an invoice. Tax invoice by recipient of supply of goods, reverse charge action. This is for the liability of pay tax and recipient. No, then the time at which the liability arises, you have to raise a tax invoice. This is not the payment voucher that I said. When you respect to services, what is the time when to raise an invoice in respect of services? This read general rule 47. 30 days from the date of supply services, within 30 days you have to raise an invoice. In case of continuous supply of services, say like a right. So there is a continuous supply of services. In such a kind of supply of services which is provided or agreed to be provided continuously or recurring basis, it is under a contract. Period exceeding 3 months. If it is less than 3 months, it is not considered as a continuous supply of services. So it should be exceeding 3 months. And a periodic payment obligation. There should be a periodic payment obligation as per the contract. Other supply of services as per all these are known as continuous supply of services. And in case of raising of invoices, it depends upon the nature of contract and other terms and conditions. So what is that? When the due date of payment is ascertainable, when the due date of payment is ascertainable as per the contract, so before the due date of payment, the invoice will be raised on the service. Where the due date of payment is not ascertainable, So you have not mentioned what is the due date of payment. The invoice should be issued at the time when the supplier of service receives the payment. So whenever he receives the payment, date of receipt of payment, he has to be invoiced. The invoice has to be raised. But payment is linked to the completion of an event. Say 20% of the particular contract is completed. Only in first contract you will have 20% work completed, 15% work completed. You will have earmarked stages of completion. That kind of stage of completion is being marked, or date of that stage of completion is marked, means on that achieving that milestone, say 15% completion, you should raise the invoice, whether you receive advance payment or not, whether the a particular milestone is achieved, say 15% is achieved or 20% is achieved, then at that to that extent of 20% you have to raise an invoice at that time of achieving the milestone. And when it comes to sort the how to issue invoice, when to issue, and when we see what are the manner of issue. So whenever it comes to goods, you should be issuing the invoice in duplicates. One is for the recipient, one is for the transporter, another is for yourself. For services, it is for the duplicate, one is the recipient and the supplier. So what a tax invoice content? What are the content of the tax invoices? You should mention name and address of the supplier, your own name and address, GST number, address to be maintained and mentioned in the tax invoice. Invoice number, there is a specific requirement as to invoice number. You have to see to that rules and things have been carefully dealt with or carefully followed. Serial number less than 16 characters is what the specification. You can have multiple series, one series or multiple series you can have. You can have alphabets, number and special characters in the invoice number, and it should be distinct for each year. 1 year invoice number should not get repeated the second year. There should be distinct invoice number for each and every year. And it should mention the date, of course, name and address of the receiver or the person who is receiving the supply, his name and address and along with his GSTN number, and name and address of the person or the delivery. If there may be a recipient, maybe a separate person, consignor maybe consigning will be different, and the recipient may be different. It's a place of delivery of goods may be different. So if that is different, you have to mention the name and address of delivery, the HSN code, description of goods or services. What is the HSN and the description of such goods, quantity, total value of supply, rate of tax, taxable value of supply, amount of tax on taxable value of supply, place of supply, reverse charge or not, signature. The contents is what the act or the rule has specified. The format, you can design your own format, provided all these contents are available in the particular format. That is what the GST law says. So when it comes to HSN code, time on time there is a requirement is being getting changed. Now you have to mention 6-digit HSN code. This turnover is more than 5 crore. This you have to see that you are adhering to the HSN code requirement as per the law. Tax invoice revision. Most of us will get come to a better clarity when it comes to revision of tax invoice. There is no concept called revision as such even in pre-GST era. In accountancy itself, there is no concept called revision of any invoice or revision of any document. Whenever you do it, make a transaction, you should see to that you rectify the transaction with a different document. That is called the main accounting itself. Even when you write a journal register in a ledger book, if you have wrongly posted a different ledger, what you will do now, you put a rectification journal. Similarly, whenever you raise a tax invoice, there is no concept of revision. If the goods has not moved to your factory, you are not issued to the other person, then there may be corrections. When your goods has moved and you issued either goods are moved or you issued the invoice to the opponent party, then correction cannot be done. This is the general. So in general, you have to keep the corrections is not allowed. Normally, if you keep that rule, even if you may not check whether the invoice has been delivered to the customer or the goods has moved, you need not verify all those things. In general rule, if you keep in mind, any correction in invoice is not permitted. You can either cancel that invoice if it is goods has not moved, or if it is goods has been moved, you have to raise either a debit note or credit note. So there is one concept called revision of tax invoice in GST. That revision does not have any relation with the revision of tax invoice what we are seeing. That is applicable for, say, I am a person dealer doing a business. My GST registration threshold as of now is 20 lakhs. So till 20 lakhs, I may not register under GST regime. So now the GST law says, so when you come 18 lakhs or some amount which has been specified, if you attain that now, you are supposed to apply for registration. Say I have applied today for registration. My turnover had exceeded tomorrow 20 lakhs. From tomorrow, 2 days after that only I am getting the registration. That 2 days I am making invoices. What I can do is, from the date of application till the registration I get, those days whatever invoices I have raised, I can raise a revised invoice mentioning the GST amount, so that you can collect the GST from the opponent party. This is what they call as tax invoice revision in GST. Apart from these circumstances, this is a one-time circumstances. Those who are coming under first time under the GST, and there is a delay in getting GST registration, and there is a supply happening along with the time with the GST registration spending, those invoices which is raised during the pendency of the GST registration can be revised. This is only the concept called tax invoice revision in GST. All other circumstances you have to raise either a debit note or credit note. This is a sample format of tax invoice. Just for a glimpse of how it looks like, I'm showing maybe different formats. So what is a debit note and credit note? The normal general business parlance, a debit note is a document which debits the customer in our books of account. Say a supplier. Normally what we will do, we will debit purchase and credit the supplier. If we are returning that goods now, we will debit the supplier and credit the goods or the purchase rate, the entry. We will reverse that. So whenever we debit the particular party, this may be for supplier also, for customer also, whoever party, whenever we debit that party account, we call those kind of entries as debit note. So for debiting a party, we will raise a debit note. For crediting a party, we will raise a credit note. This is what the general concept of debit note, credit note in business parlance, but kindly get away with it. Same concept, but in a different manner. Whenever you call as a GST debit note or GST credit note, you should see whether what is the conditions in which you can raise a debit note. When you can raise a debit note, all these debit note and credit note in GST parlance will only apply to the outward supplies, not with respect to inward supplies. So whatever the output supply, you are raising an invoice. So you are the person who can make any changes with respect to the invoice. Say you have raised an invoice, in the invoice is less than the actual value, or the rate of GST or the tax charge is less than the value which is being raised, the invoices which you raised. So for the differential amount for the value, you can raise a debit note. Here also you will be debiting the party and crediting the sales account only. But this is the only circumstances when which you can raise a debit note. It is vice versa for credit note. Whenever there is a change in the value of the invoice required to be changed, there is you have mentioned wrongly a good pencil. Say the pencil example I said 1 rupee instead of the pencil being 1 rupee, you have mentioned as 2 rupees in the invoice. Wrongly you have mentioned as 2 rupees. Change that to 1 rupee. You cannot raise correct that invoice. What you can do, you can raise a credit note. In the value with respect to the actual value which is being raised in the invoice, then the credit note is raised. So next is there is a change in the rate, whatever the GST rate. So instead of 5%, you are charged 2.5% or charged 18%, then the differential rate, no, credit note or debit note can be raised. Quantity received by recipient is less than the invoice quantity. Say you said invoiced for 2 quantity, but the opponent party actually received 1, means the differential quantity you can raise a credit note. The goods returned by the supplier, you can raise a credit note. These are all the circumstances in which a debit note and credit note has to be raised. Kindly, whoever does a business, when you want to raise a debit note or credit note, has to verify with respect to GST what are the circumstances, whether it is fixed for debit note or credit note. There may be some other adjustment things which has to be raised as per business parlance, but that does not fit under the debit note, credit note, which is being called under GST. There may be some financial debit notes or financial credit notes which you may call or which you may raise, but that doesn't fit in the definition of debit note, credit note, which is being defined under the GST law. Receipt voucher. I said no, when advance register or advance register, any entry which appears in advance register, this receipt voucher will come. So for if you receive any advance for supplier, so it's a supplier receives an advance, receipt voucher has to be issued, and the tax on receipt voucher you have to being paid as such. The tax whatever you pay on the advances, you can later on when the invoice is raised, that advance whatever tax paid on advance, you can adjust it. And the format specified is in line with the tax invoice. Whatever the items which is there in the tax invoice to be captured, this has to be captured in the receipt voucher. Refund voucher is the vice versa where the advance is received. So whenever the advance is received, instead of supplying the goods, that advances you will return it back, means you have to give a refund voucher. Delivery challan. So Rule 55(1). Whenever in regular businesses, international business practices, pre-VAT era, before the value-added tax concept has come under, normally what you will do, you will raise a delivery challan, you supply the goods along the delivery challan, you later on raise an invoice. Or what you will do now, you will raise a delivery challan, along with you will raise an invoice, and goods will be supplied along with the DEC and invoice. The concept when it comes to central excise came, the concept of invoice come DC came, invoice come delivery challan. In central excise regime, normally when you move the goods out of factory, in DC it is not allowed to move with delivery challan. You have to raise an invoice come delivery challan. So VAT regime, value added tax, we call the value added tax as a GST, goods and service tax in India. This concept of GST, the way concept of GST is in international parlance is called as value-added tax. In value-added tax parlance, whatever the movement of goods, whatever the supply, what you say, supply, when it comes to supply, it has to be raised through the invoice, taxable invoice or the bill of supply. When comes the delivery challan? So delivery challan issued and transportation of goods without an invoice. When it can be done? When it is a supply of liquid gas, quantity not known at the time of removal. So when you supply a liquid gas and the quantity is not known at the time of removal from the place of business, so don't consider that I'm transporting to a lorry. I know that the lorry volume of gas. Don't consider. We are considering different scenario also. You may supply gas through a pipeline or some other means. So for all purposes, the law should be same. So say when you supply a gas, when you don't know the quantity at the time of removal, then you can supply the gas based on delivery challan. This is one exception when you can raise a delivery challan. For job work, we are sending a good for job work, which is going to be returned back from job worker for further processing at your factory. Then for the job work, you can raise a delivery challan. This is as per section 140. You should see what are all the conditions of job work, when your goods can be given for job work, what is a job work, all these things you should read the law as such. For other than by way of supply. Example, branch transfer within state. So kindly remember, within state, if you have one registration, then it comes under branch transfer. There you can issue a delivery challan. But interstate transfer is not, even within branches of your own concern, is considered as a supply and you have to raise a taxable invoice. So within branch, that is to, it is registered under a single GST number, then it will come under a branch transfer. So there may be circumstances when you would have registered multiple GST number in the same state. Say one GST number you are trading in goods, and another GST number which is located in Tiruchi, you are stationed in Madurai as a trading concern. In Tiruchi is the manufacturing unit. From Madurai, you are transporting the goods. You are selling, you are transferring the goods to the Tiruchi unit for manufacture. Then two GST numbers are different. Then it has to be only transported to invoice, not to delivery channel. Then other supplies as notified by board. The board or the GST council has specific powers to specify other supplies which can be through delivery channel. And we have to see to that the rule 138 which has to be adhered to with respect to the delivery channel. And when it respect to job of DC, there is a GST ITC 04 return which has to be filed. That return has to be filed, which will trace the movement of goods to the job workers and the return of goods from the job workers. This payment voucher, this is for reverse charge mechanism. Whenever there is a liability to pay GST under reverse charge mechanism, you have to issue the payment voucher. It is the format as an tax invoice. So whenever the payment is made, the payment voucher has to be issued for goods or services which are liable to pay GST under reverse charge mechanism. So now three buckets we have seen: books of accounts maintained by dealers, maintained by GST, the records by dealers. We are at most coming to the end of this session where we will see what are the records by GST. Records by GST. Records is nothing but the document which is being created by GST for any transaction. Books of accounts means all the transactions which are recorded in the, which are being generated through the records. This is what are books. Two records which has been generated by GST are the e-way bill and e-invoice. What is it?
உடனடியாக அங்கு வந்த போலீசார் குண்டுகள் கூட்டு குலைக்கப்பட்டு அத்துடன் 2 லட்சம் ரூபாய் கொலை பணத்தை பிடித்தனர். அதேபோல் விநாயகர் கோவில் கூட்டை குடைந்து.
Shall I proceed, sir? Okay, let me proceed. E-way bill. E-way bill is nothing but an electronic pay bill. What is called as an electronic pay bill? It is nothing but a DC, a delivery channel, which is electronically generated by the GSTN for the movement of goods. So normally when we call delivery channel, it is a record which is created for movement of goods. The delivery channel concept is it has not been specific for all types of goods. Your price and invoice for specific for movement of goods, to track the movement of goods and to see that the movement of goods is properly say supported by the invoice. The electronic way bill concept has been introduced. In electronic way bill, we will generate an e-way bill for each and every invoice which require movement of goods above a threshold value of, say the value is say 50,000 within the state, 1 lakh outside the state, like that. The threshold value is defined. Find the threshold value, there is a movement of goods. Along with the invoice, electronic pay bill is a mandatory thing. So electronic pay bill, you have to generate in a separate e-way bill website maintained by GSTN. So these records creation by the GSTN, electronic pay bill and the electronic invoice are two separate websites maintained by the GSTN. So in electronic pay bill, this has been say in practice for 3 or 4 years. The electronic invoice has come in the recent days. The electronic pay bill, you will input all the details with respect to your invoice in your electronic pay bill website. It will generate a way bill. Along with that electronic way bill, the invoices copy has to be provided to the transporter for the movement of goods. What is a e-invoice? So e-invoice, we have a separate website called e-invoice website. Again, as what you do in electronic way, you have to enter all these things. After entering all these things, you will get a IRN number, the invoice reference number, which is generated by the e-invoice website. That has to be printed in your invoice. Then only you can print the invoice and issue the invoice. So printing, issuing, all these things, whatever physical, it holds good for electronic also. So whatever the e-invoice, this e-invoice now stands mandatory for persons who do transaction 50 crore or above the previous year. E-invoice has become mandatory. So all invoices which has to be generated by those persons whom e-invoice requirement as per law arises, has to enter the details in the invoice portal and generate an IRN and issue invoices along with that IRN. So the IRN and there are QR code requirement also for certain type of people, and whatever this IRN is generated has to be a QR code has to be generated. It will be generated. It has to be affixed along with the invoices. So this is an e-invoice system registration website screen which I am showing for this for an understanding. So as a that 50 crore and above which is applicable, this is what is a QR code. QR code is nothing but quick response code. Now you have seen in all places in Aadhaar card and everywhere this QR code is being captured. This QR code will contain all these details: GST or supplier, recipient, invoice number, date of generation of invoice, invoice value, number of items in the invoice, purchase and code, unique invoice reference, that is the IRN which is set, date of generation of IRN. All these things are captured in this QR code. This QR code has to be printed in the, along with the invoices. Why this QR code is? Since you can capture the data quickly using any electronic mode, this QR code is useful. Or otherwise, the people have to scan or type all these data. So it will reduce the time. So whenever you transport a goods on the way, any authorities has to verify. They can just scan the QR code which is printed. They can verify with the backend web server what are the details are correct or not. Then they can allow the goods to pass on. So this is the requirement of QR code. And again, for identification, your customer can scan the QR code and get the details, what are the invoice details from the goods supplied, instead of typing all the invoice details. This is an e-invoice sample with the QR code printed. And general presumptions. This is going to document specified in section 144. So any document or record what you produce will be considered as an evidence for prosecution. Whenever there is a prosecution, it's produced by a prosecution, it is considered as an evidence. So you should kindly remember that whatever the documents and records are maintained are proven correct. There is no falsification, there is no false in the information. Because if it comes for, it is later on found to be false, then under the Evidence Act and under the general CRPC, for supplying of false evidences, prosecution may be initiated. For produced, seized and received from outside India, unless and proved contrary, all these are conditions. Whenever there is a document is produced, whether it is produced within India or outside India, unless proved contrary, as such, accepted with regard to content, signature, all these are accepted as such. Whatever the documents are presumed as such, it is presumed as an evidence. It is presumed that the product seized or received are from outside India. If it is so, it is unless proved contrary. Be accepted as such with regard to content. Whatever content is there, signature, attestation, it is accepted as such. So there will not be any further investigation on those things. So you should be very careful with respect to the documents and records, and it should be as mentioned that it should be true and correct. Okay? And what all the ways in which the documents can be accepted by the department, 140 says. It says microfilms, facsimile copies, computer printouts, soft copies, and can be duly certified as evidence. The requirement, they can ask you to certify it as an evidence. So certain things are not there, microfilms, it is not nowhere used as such, but facsimile also does not be used. All these kind of information can be asked the department and can ask all these information in the particular format. This is what the law says. As such, I have completed my presentation. If any queries there in respect to whatever the chapters we have discussed, you can raise so that I can address those queries. I'm not seeing any queries in the message box. If there is any query in the YouTube channel, also you can.
முடிச்சிட்டாரா சார்?
Thank you, sir. There are many points highlighted in GST books and records, like when you maintain period of maintenance, stock registers, advance registers, tax records, registration, electronic tax liabilities ledger, tax invoice content, tax invoice HSN. There are so many highlighted points that today chief guest is highlighted. Thank you, sir, for your enriching and provoking or wonderful thought. Thank you, sir. Now the time is interaction section. Any doubt, you have send the chat box your question, you have clarify the doubts.
கார்த்திகேயன் சார்?
Sir, have you words about this faculty development program, sir?
I joined.
Sir?
Yes.
Sir, I delighted invite to our Honorable Dean and Control of Examination talk about few words about this fourth day FDP program. Sir, now I invite, sir.
Okay, thank you. I'm very happy to say a few words about today's topic because today's resource person auditor Anand has explained the maintenance of books of accounts by the dealers under the GST. It is one of the important aspects of GST implementation because before GST was implemented, there was no such mandatory requirement with regard to maintenance of books of accounts. Whereas after the implementation of GST in our country, here some of the important documents with regard to GST, it is mandatory. Earlier it was not mandatory, but now it is mandatory and you must maintain such books of accounts according to the law. Then only they will be accepted. And what are the documents to be produced as evidence? He has explained very clearly in his presentation, which consists of almost, around 70 slides. And almost in all the 70 slides, he has clearly mentioned the different invoices to be prepared and how to prepare the invoices. He has also shown some specimens of invoices so that the students will be able to understand the preparation of invoices. And he has also explained the importance of QR code. Nowadays, we often come across the QR code which is used by dealers and customers for making payments, and it is one of the important requirements under GST law. And one participant has raised a questions on about the e-way bills, and he has also explained about the importance of e-invoice, because mostly the transactions carried out by the dealers, it is online. So as far as the online transactions are concerned, we need to prepare documents mostly in online. In that way, how to prepare the invoice for the purpose of GST, our resource person has explained very clearly the e-invoice. And another important thing is also clearly differentiated the debit note and credit note, which normally the students of commerce know how to prepare the debit note, credit note, but it is totally different in the case of GST, and he has explained very clearly about the preparation of debit note and credit note by the dealers. And in his lecture, I could see how much efforts our resource person has taken in preparing the slides to explain the various aspects relating to books of accounts and records to be maintained by the dealers and GSTN under the GST law. And I hope the participants have understood the preparation of the books of accounts. And we must thank our resource person, Anand, the charter accountant, and also the firm, GVN, and our former student alumnus, proud alumnus Shankar Satyanarayana and his team, who has arranged this workshop, 1 week faculty development program, and the entire 1 week program is on GST law and various aspects of GST law, right from registration. And today, the fourth day, the very, very important topic under GST is the maintenance of books of accounts. And today's presentation by our resource person is highly useful for our students and participants of this workshop. And I must personally thank our resource persons, Anand, and also appreciate the involvement of the participants in attending this workshop to learn more aspects relating to GST. Thank you, Mr. Anand, for your wonderful presentation for participants of this 1 day FDP program on GST. Thank you, sir.
Thank you, sir. Thank you, sir. With
Thank you
respect to
very
the
much.
question,
On behalf of the Department of Commerce and the Commerce with the Computer Applications of Vivekananda, Tiruvedakam West, I thank our resource persons, Mr. Anand, for his wonderful presentation on today's topic. Thank you, sir. Thank you for the wonderful presentation. Thank you.
thank you, sir. With respect to one question, with respect to e-way bill, I need to mention that whatever the whenever there is a movement of goods which is exceeding 50,000 within the state, there is a requirement of e-way bill. And whenever there is a movement of state, the interstate transfer movement of goods, there is a requirement of e-way bill. So the e-way bill is, they ask whether it is mandatory or not. So whenever these two type of transaction, 50,000 within state, more than 50,000 within state and interstate transportation, e-way bill is a mandatory thing.
Thank you for your essence of this today FDP program. Thank you, sir. Now I Dr. Vivekananda, Assistant Professor of Commerce and Computer Application, to propose a vote of thanks.
Thank you, sir. Good evening, Vivekananda here. It's a great pleasure for me to present the vote of thanks. First of all, I would like to thank postgraduate and research Department of Commerce and the Department of Commerce Computer Application organized the faculty development program. And I thank our Holiness Second Swamiji and the Global Swamiji for their blessing. And I thank our Honorable Principal Sir, Dr. Tiruvedakam sir, and I thank our beloved Vice Minister, Dr. V. Parthasarathi sir, and I thank respected Dean and Controller of Examination, Dr. K. Karthikeyan sir, and IQAC Coordinator, Dr. K. Satish Babu sir, for their presence in this faculty development program. And Dr. B. Raja sir for his brief welcome about this session and introduce our good guest. Thank you, sir. Next, I would like to thank our resource person, CAB Anand Saradakam, for valuable letters. Thank you, sir. I thank our postgraduate research owner, Thomas, Deputy Department of Commerce, Dr. S. Vasulji, sir, and I thank Department of Public Application Coordinator, Dr. S. Sanderson, sir, Dr. K. Chalapatil, sir, Dr. C. Vadivel, sir, Dr. S. Vadivel Raja, sir, Dr. Vadivel, sir, Dr. Bhakti, sir, John Mohan, sir, Dr. B. Murugan, sir, and Dr. R. Mohan Raja, sir. Thank and I thank our other faculty members and research scholars. Thank you, one and all. Thank you.
Let us end with program. Our usual chant mantra Om Sarve Bhavantu by all.
सर्वे भवन्तु सुखिनः सर्वे सन्तु निरामयाः सर्वे भद्राणि पश्यन्तु मा कश्चित् दुःखभाग् भवेत् ॐ शान्ति शान्ति शान्तिः
Sir, thank you, sir.
Sir, sir. Thank you, sir. Very nice. We request you to please send your PPT. The participants are request us
Yes,
to
sir.
you are please. Okay, thank you, sir. Thank
I will
you,
send
sir.
it soon, sir.
KK sir, also thank you, sir. Thank you for your valuable feedback about this session. Thank you, sir. Thank you.
Thank you, sir. Thank you. Sir, Anand, sir, thank you, sir.
Thank
Thank you,
you.
sir. Thank you, sir. जी हाँ जी थैंक यू